There have been several videos on this channel describing MACRS, which is the depreciation system used most by businesses for tax purposes. But lurking in the background is another depreciation system that can be used and is required to be used under certain circumstances. I'm the Tax Geek, and here is the Alternative Depreciation System and Depreciation Recapture, oversimplified. The MACRS depreciation system I've described in previous videos is known as the General Depreciation System. The General Depreciation System is an accelerated system where more depreciation is taken in the early years of an asset's recovery period and less as the asset ages. This often can more accurately reflect the decline in usefulness of most assets over time. The Alternative Depreciation System sits alongside the General Depreciation System. Two characteristics separate the alternative system from the general system. The Alternative Depreciation System uses a straight-line depreciation method, where the same amount of depreciation is taken for each year of an asset's recovery period. And secondly, the alternative system usually features longer recovery periods for each class of assets. Using the Alternative Depreciation System results in lower deductible depreciation expense annually, especially in the first few years of ownership. Businesses can opt to use ADS, but the Alternative Depreciation System is the only system recognized for tax purposes where business use percentage is less than 50% of total use. This can happen with what is called listed property, which is property that has a very high potential for both business and personal use. This includes most passenger vehicles, light trucks and SUVs, as well as photographic, audio and video recording equipment, and musical instruments. For example, Alvin purchases a 4K video camera for $2,600 with the idea of earning some money by making wedding videos. Most of the time, however, he uses the camera personally, making videos of family and friends. In the first year, only 30% of the camera's runtime was used in his business. Therefore, Alvin must use the Alternative Depreciation System for depreciating the camera. He uses a 10-year asset life, which is typically used for such equipment. In the second year of ownership, he uses the camera 40% for business. Here is how Alvin's deductible depreciation expense for the second year is calculated. He takes the camera's basis of $2,600 and multiplies it by the business use percentage of 40, yielding $1,040. A 10-year asset life means that 10% of the adjusted basis of $1,040 is taken to arrive at a depreciation deduction of $104 for the second year. But you might ask, if the business use percentage of the camera were to rise to over 50% in subsequent years, can Alvin take regular MACRS for those years? Unfortunately, no. If ADS is used for the first year of ownership, it must be used for the asset's entire recovery period. The same can't be said if business use drops from more than 50% of total use to less than 50% of total use, or the asset is converted entirely to personal use. In the year business use of the asset drops to less than 50% of total use, the depreciation method must be changed to ADS for the remainder of the asset's recovery period. But that's not the worst part. Any accelerated depreciation, that is depreciation that is over and above ADS straight line that has already been previously deducted, must be recaptured and reported as income. Here's how that works. Let's just say Alvin used the camera 100% for business in the first 2 years of ownership and claimed regular 7-year MACRS depreciation for those years. In those first 2 years, Alvin deducts a total of $1,009 in depreciation expense on the camera. In the third year of ownership, his business use of the camera drops to 25% of total use. Therefore, he must switch to the Alternative Depreciation System and recapture any accelerated depreciation he deducted in years 1 and 2. Here is how the recapture amount is calculated. When the business use drops below 50%, Alvin switches to ADS with a 10-year recovery period. Depreciation for the third year is only $65. Now it's time to calculate the recapture amount. Using ADS, depreciation for the first 2 years of ownership would have been $390. This is subtracted from the MACRS depreciation already deducted and shows that $619 must be recaptured and reported as income. It works similarly if either a special depreciation allowance or a Section 179 deduction is taken in the first year of ownership. Now let's suppose Alvin claimed a $2,600 Section 179 deduction the first year he owned the camera. Normally, he would claim no depreciation in the third year of service, but now that the business use dropped to 25%, he now gets to claim $65 in ADS depreciation. But he must recapture the difference between the Section 179 deduction and the ADS depreciation calculated earlier. This comes to $2,210. It's very important to note that when prior accelerated depreciation must be recaptured, the prior year returns are not amended. Instead, the recapture amount is reported as other income on the business's Schedule C, Form 1065, Form 1120, or 1120S. There is, of course, more to the alternative depreciation system and depreciation recapture than is covered in this video. Additional resources and information are linked in the video description. If you found this video informative, a like would be most appreciated. Subscribe to the channel for more oversimplifications of our overcomplicated tax system. And your questions, comments, and suggestions are always welcome in the comment space below. Thanks for watching, and I'll be back soon with more of Your Taxes Oversimplified.